Hello and welcome to Analyzing Finance with Nick. In today's video, I am going to be discussing the economic future of Taiwan. Taiwan has been in the news lately due to the U.S. Speakers of the House contentious visit to the country and the geopolitical tensions surrounding the island. I think the first thing really we need to look at when it comes to Taiwan is its economy is a historical success story. In the 1960s, Taiwan's GDP per capita was under $200 a head, and now it's well above $28,000 nominally, and depending on how you factor in purchase power parity, it could be even higher than that. Compared to mainland China, they are trouncing them. Mainland China's GDP is a little bit over $10,000 per year, which is around the world average, whereas Taiwan is flirting with first world country status. And I think really the gap in performance between Taiwan and the mainland is part of the reason why the mainland Chinese government is so insistent on bringing Taiwan fully back into the fold. The fact that Taiwan has outperformed China as much as it has under a government that was its main opponent in its civil war back in the late 1940s is quite frankly an embarrassment to the Chinese Communist Party. And if this example is made blatantly clear to the mainlanders, that is essentially cause risk of the party losing power, because they say, hey, look, if our country was governed differently, we could have a better outcome like Taiwan did. Why aren't we as prosperous as Taiwan? And then also, if you look at a bigger picture, if China's government did improve in a material way and was a more free and open society, then they would be a legitimate threat to the U.S. as a dominant world power. In fact, it might be the CCP as the reason itself on why China is being held back versus its potential. I talk more about this in my Ray Dalio reaction series, which I'll have a card in this video and also have a link in the description on my thoughts about China and their ascent as a world power. But let's get back to Taiwan. Taiwan's economy heavily relies on technology exports. As seen on the chart on the right, Taiwanese companies generate 63% of global semiconductor revenue and 50% of global foundry operations. If you count mainland China, then that output is over 70% when it comes to semiconductor manufacturing. And Taiwan is also heavily dependent on exports, which are 58.8% of Taiwan's total GDP. And electronics manufacturing as a whole is 18% of Taiwan's GDP. Taiwan has done very well the last few years due to the global semiconductor shortage, as higher prices for chips and increased demand to catch up has resulted in an economic boom. However, if you have a glut in semiconductors, it could always turn the other way. They've been fortunate that the Taiwanese government and businesses have invested in a sector that's continued to grow in importance since the invention of the microchip in the 1980s. So that's kind of what's going on with them now. So what are the current developments and the risk factors for the future? The first one is really that the world is adapting to the bottleneck created in the semiconductor industry due to Taiwan's precarious geopolitical situation and just the whole idea of relying on one foreign source for a very strategic industry such as microchips and semiconductor manufacturing. The rest of the world, particularly the Western Alliance, has to adapt to bring that in-house so that they are not at risk of the next geopolitical conflict, particularly if that's a geopolitical conflict with China. So as a result, semiconductor factories are already being built in many places outside of East Asia. That includes plants in the United States, most notably in Arizona, which is Phoenix has become a big hub of semiconductor manufacturing, and that will continue to be an even more important center of that industry in the 2020s when the new factories are completed in 2024. Saudi Arabia is building fabs. Germany and Ireland, there's chip companies constructing fabs there, and also in other Midwestern states in the United States, such as Ohio. The U.S. recently passed the CHIPS Act in Congress, and this is going to provide billions of dollars of incentives for semiconductor companies to build factories and operate in the United States. And with the CHIPS Act, the United States is now a competitive place to build operations in this industry, along with the historic leaders such as Taiwan, Japan, and Korea and China. Uh, Due to Taiwan's success, they have to adapt to having a higher wage scale economy. They can't rely on just being a low cost producer, even if it's a low cost producer of more complicated goods such as semiconductors, as wages in ASEAN, mainland China, and Latin America can undercut them for cheaper, lesser skilled manufactured goods. So they're going to have to continue to move up the skill ladder or rely more on consumption. Uh, the challenge is that Taiwan's economy is heavily export driven. As I've mentioned before, 58.8% of the overall economy in Taiwan is exports. So they're going to have to adapt to either suit the consumer or just continue to make more specialized goods that the world continues to need disproportionately. The other real challenge for Taiwan is they've had increased trade and FDI ties to mainland China. In the 1980s, the US was 40% of Taiwan's exports went to the US. Now, their leading export partner is China. If you count Hong Kong and the mainland combined are over 42% of Taiwanese exports and over 22% of imports. China, by far, is also the leading source of foreign direct investment into Taiwan. However, the elephant in the room, really, for Taiwan and their economy is the geopolitical risk from a potential invasion from China. China really has three ways to deal with the Taiwan issue. The first thing they can do is not invade and try to peacefully integrate. They could try to propose a one country, two systems type of deal, similar to what they did with the British in regards to Hong Kong. However, what the recent crackdowns in Hong Kong make that less likely to actually come due to Taiwanese leadership being unable to trust the CCP to honor such an agreement. And the next possibility is to invade through force before 2024. And the key reason why I mentioned 2024 is because that's the year when a lot of the alternative semiconductor factories in places such as Arizona will be operational. And the later they wait for the invasion, the less it would cause pain to the US and its Western allies economically and supply chain wise if they strike. So if the goal is to maximize pain to the West and trigger a response militarily, then they would want to strike earlier. However, if the goal is to take Taiwan by force and not get any sort of response, or have the Western world and the international community not respond or not care as much, then you want to wait until after 2024 and probably at least till 2030, because by then the global semiconductor supply chain will be sufficiently diversified so it will not be as urgent for the West to react. I mean, as you've seen with the current conflict going on in Ukraine, it is very difficult to get the American public behind a foreign war if they don't see the urgency of the reason why it matters to them. And you did see a spike in oil and grain prices because of that conflict, but it really wasn't enough to garner unanimous support for direct intervention. It wasn't worth the risk of a potential nuclear war. And you could see the same thing here. Say if we move all the supply chains, I'm referring to the United States, of semiconductors into safer allied regions or in-house, and China goes into Taiwan, how politically feasible is it to sell to the American public that the defense of Taiwan is in the best interest of the average American citizen? It's a much more difficult sell if our reliance on them to build our cars and our electronics and a lot of the critical infrastructure that is now dependent on microchips is not needed. And I think this is partly this, along with just what happened with the pandemic and how the supply chains got messed up just due to an overall reduction of global trade due to exogenous shocks, is why things such as the CHIP Acts were passed and why it's become more of an imperative to onshore supply chains. So the timing of it really depends on if the goal is to maximize pain for their geopolitical rivals, or it's to increase the probability of being able to take the island without a fight. I don't really know what the CCP's brass is thinking about this, but this is kind of the game theory that they're playing right now. And as I like to do with most of these comparison videos, the last thing we're going to do is compare Taiwan to a U.S. state. And the U.S. state we picked for this is Maryland. And the reason why I picked Maryland is because Maryland is actually very similar in size, land-wise, to Taiwan, even though it's one of the smaller states in the United States. If you look at the total area, Taiwan's total area is 14,000 square miles, whereas for Maryland, it's 12.4 thousand square miles. Their populations are very different. Taiwan has almost 4 times the population of Maryland. Taiwan has 23.5 million people, whereas Maryland only has 6.8 million people. However, the average Marylander has a much higher income than the average Taiwanese citizen. Maryland has a GDP nominally of 438 billion US dollars, whereas Taiwan has an $850 billion GDP. However, Taiwan's economy is growing much faster than Maryland's, as the average GDP growth in Maryland in the past 5 years has been less than 1%. They are both heavily concentrated in a single industry that, in this case, for Taiwan, it's semiconductors and electronics manufacturing, whereas Maryland, it's government and defense contractors and government-related industries, and they both are about 18% of GDP for each region. In terms of global 500, Fortune 500 companies, Taiwan has a lot more than Maryland does. The most notable ones in Taiwan is Taiwan Semi-Conductor. Maryland, the most notable Fortune 500 companies there are T. Rowe Price, the mutual fund company, Marriott International, and Lockheed Martin. And then the last measure I'm going to look at is the competitiveness rank. And for Taiwan, it ranks third in economic competitiveness in Asia Pacific. It's only behind New Zealand and Singapore, which is pretty impressive. And Maryland is 36th, which is pretty low, but for how blue of a state it is politically, it's actually pretty high. Overall, Taiwan is in a precarious situation. The fate of the region really depends on whether it is invaded by China or is able to stay the course, and how well it's able to adapt to the migration of the semiconductor industry. if things kind of just stay the same at the current balance now, I expect the country to do well. If it gets unified with the mainland and China, then I expect its economy to be even more integrated and concentrated with China, and therefore its performance to be completely correlated with the new mother country. That's really all I have to say on it, and it kind of depends on that. Historically, countries that are in the middle of geopolitical crossfire tend to not do as well as other countries if that geopolitical crossfire heats up. However, as long as things stay peaceful, you can have a prosperous society in a geopolitical fault line. Look at West Berlin and West Germany as an example during the Cold War, or South Korea to this day. So it's not necessarily doom and gloom because of the current situation. It's just a matter of whether it heats up or not. Thank you for watching, and I look forward to your feedback on this video.